Hello, and welcome to this short explanation of cost structure. As an organisation gets more or less busy, some costs will change, but others will not. Costs can therefore be classified as variable or non-variable. Variable costs are also known as marginal costs. Non-variable costs are also known as fixed costs or unavoidable costs. Some costs are a combination of variable and non-variable costs. For example, utility bills often comprise a charge per month, which is non-variable, plus a charge per unit consumed, which is variable. Costs like this are sometimes known as semi-variable or semi-fixed. So here we can see the variable costs going up as more work is done, and the non-variable costs which stay the same no matter how busy you are. And then here is a semi-variable cost, which is the two combined. For most decisions, this is all we need to know about cost behaviour. However, if the activity level changes by a large amount, many non-variable costs would have to change. For example, once a production worker is working at 100% of capacity, any increase in production will mean hiring another person, with a sudden significant increase in cost. For cases like this, the non-variable cost is actually a stepped cost, as in the diagram. The relative proportion of variable and non-variable costs found within a business operation is called the cost structure. Now, the higher the proportion of non-variable costs, the more risky the business is, because you have to keep paying the non-variable costs even if you're not busy. The amount of risk can be measured as the operating gearing, shown here, so the proportion of non-variable costs out of the total. Note that descriptions variable and non-variable relate to the total costs of a business operation. Costs per unit behave differently, as you can see in the table here. So the total variable costs go up, but the variable cost per unit stays the same. Conversely, the total non-variable costs stay the same, but when you divide it by the number of units, the more units you have, the smaller it becomes. Right, once we know what the variable and non-variable costs are, we can use them to forecast costs for any level of activity. You take the variable cost from the variable cost per unit times the number of units, and you add the total non-variable costs, which are always going to be the same for each scenario, and that will give you the total cost. So here's an example. We've got variable cost of £1.60 per unit and £22,000 of non-variable costs. So for 6,400 units, we multiply the 6,400 by the £1.60. That gives us the variable costs. We add the non-variable. So now we can predict that for 6,400 units, we're going to spend £32,240. Right. If data is available for several levels of activity, we can work out what the fixed and variable elements are in a semi-variable cost. There are two ways of doing it, the graphical method and the high-low method. For an explanation of these techniques and any further information on this topic, please follow the link on the next slide. Thank you for your attention. I hope you found this video useful.